All right. Hello, everyone, and welcome to a new week, a new market, and of course, a new gap. The markets are opening up fairly bullish here today for the S&P 500 futures. Crypto's kind of sideways, only just slightly up, and of course, US dollar is dropping. Welcome, everybody. I hope you're having a great start to the session and a good start to the week. And for anyone out there from the US, good morning. For Europe, I guess good afternoon. And for, of course, the Asian audience and Australian audience out there, or Oceania, it's good evening, good night, basically 11:30 p.m. It's getting rough out there for the Oceania audience. So welcome everybody to a new week. $77 starting it off with the coffee saying $4 super sticker. Thank you, Sandollar, as always. Appreciate your support, man. So what's going on right now in these markets? Well, basically we have a whole bunch of new, fairly radical changes. Of course, we've seen what's going on now with China. They're basically doubling down on COVID policy, and that's having an effect, especially on things like iron ore stocks. If you're from Australia, you would know that things like BHP and Rio, two of our big iron ore stocks, were unfortunately down for today. I'll just quickly reload my Epic pen so we can use that effectively to draw on the screen today. Let's quickly do that now. For some reason, it's not working. But anyway, we'll get that ready. So, unfortunately, the COVID zero policy is here to stay for now. Maybe that will reverse. We don't know in the future. It will have supply shock issues. And this is something that I think we need to be aware of. And it is going to have an effect on the supply side at some point in the future. Now, that doesn't mean you instantly go and short that news, but it does mean that we have to continue to deal with that situation. And it's kind of bad when you think about the longer term here over the next coming months into potentially the next year. Let's get started, though, by talking about the markets as a whole. So we will cover that topic a little bit later. I want to talk about, though, US dollar to start off with. So in the video on the weekend, we discussed the idea that this is where the US dollar should switch to the downside if it is going to do so. And that was due to a few technical reasons. Here we have that kind of 114 zone, or that 113.50 previous supply area, a resistance, and it turned at this level and started to show us weakness. It then pulled back. So let's have a look at the 1 hour here. And what you'll notice is that the market kind of took a low recently, and then it's pulled back up to this zone. Then it's made a peak, it's made a trough, it's made a higher peak, and we've seen that switch to the downside here. And that's what we're talking about. We'd like to see a new low. So, of course, today, if we got a new low, that would be significant. We certainly want this level to be taken out right here. And if that does happen, where's the next most logical conclusions for the US dollar? Well, there's quite a lot of free space in between here and here. So if you're thinking about where the shorts kind of could lie underneath these zones, once you take out something like this 112 kind of level, then you're most likely moving towards the 110.92 or even the 110.18. And that's going to have dramatic kind of implications for also stocks, because as we know, if the US dollar has been going up, it's been correlated to the stock market. If we load the SPX next to it, you can see here strong US dollar switches, which happened at this point. Notice that it ended up driving also into weakness here in the S&P 500. Strong dollar, weak. And while it's not 100% correlated, you can even see here when the dollar went down, the stocks bounced. When the dollar went down, the stocks bounced. And that's really the kind of coinciding method here. If the dollar does weaken, there's a good chance that the S&P 500 will find some initial strength. Now, this could probably and most likely is part of some kind of squeeze. If it continues through this session, which of course it may not, but if it does close up and bullish and maybe we'll get a 2% session or something like that, we're starting to talk in the vicinity of a potential squeeze that could push into that 39.20 zone, 38.80 to 39.20 on the S&P 500, and even the 4100. Both these levels could be pressured. So that's something that we're looking for today. We're looking for the idea that the dollar will weaken. If it does breach through this area here, there's a good chance that the S&P 500 will rally further. And this is going to be an incredibly significant zone for us to watch this week. So we're starting here with the US dollar. Let's move, however, over to the US 500. And what I want to ask everybody in the community right now is really just a question about markets and how you feel. Is there any particular stock that you think provides the best trades at the moment, or something you've been looking at? Let us know in the chat. I'm reading the chat. So if you have something that you think is providing an amazing opportunity, then of course you can discuss that and just let me know, and I'll check out if anyone's finding the same thing, and maybe we'll check that later on in the stream. So the US 500 here, a few people are saying futures are fake and the market usually will gap and close below those. Yeah, I totally agree that the futures put in kind of a concept, and then often we do reverse that concept. So what levels are we watching today? Well, I think first up, what we want to do is probably add a fib retracement onto this current little price here. So if the market continues to rally, let's say it does rally through the start of the session, where could be a little bit of a turning point here for the market to go down? And I think it's, again, we're going to use a little bit of golden pocket action here because we've kind of got a reverse golden pocket. So we've just selected a fib for that in between 61.8 and 66 area. You'll notice that the market's come off that zone and now it's bulling up. So if we do continue to have very strong futures action, is it possible for us to get back into that 36.75 zone and then find the weakness? I think that's probably where some sellers will come back in. Let's have a look at the smaller time frames here. Go to the 5 minute and check it out. So here again, we have that previous structure zone. We have that previous support. And if the market is able to rally through this area here, you think it might be able to get back into this zone. It does look positive for now. I mean, as we said on the weekend video, this was kind of the level of equilibrium. It's bounced off that level and now it's moving on up. So where the weakness probably lies is somewhere around here. If it makes a new peak this week, I think that's incredibly significant. So that level is worthy of putting an alert in for. If you take this high, we most likely will fill that gap. Well, very likely, I guess we'll fill that gap at that point, 37.42 gap, and we could be looking for the squeeze. So I think a lot around this level should be paid attention to. What happens after 37.20? Do we see a daily close that high? All these things will be really key zones, because remember, the way that last week closed was effectively a long leg doji. A low, a high, an open, and a close. If we take the high, we're kind of saying that maybe the next level for us to move towards is the next level of equilibrium, or the next key zone in this market. So I think taking the high will be pretty important this week should we see it. Let's see what everybody's saying in the chat though. A lot of people are saying Intel, and then people are yelling about Intel is dying and everything's bad. A few people mentioning Tesla suffering at the moment. Yeah, that chart is nasty. I got to say, it is nasty into earnings. Earnings will be very interesting here for Tesla, because it's one of those stocks that's holding up incredibly well in consideration of its PE valuations. Dannyism says, hey, FX Evolution, any thoughts on Aussie transferring money for investments? FX hurts us. I think it's okay for individual stocks, but not for ETFs. You can buy hedged ETFs and stuff, Dannyism. You can definitely check that out. Well, I mean, it doesn't really hurt you if you convert and then the US dollar continues to strengthen, because that means that you're now suddenly converted to the greatest dollar in the world, yeah? The USD, so it's not so bad. But yes, it's a consideration for our European, our Asian audience, Australians, everybody out there that isn't in the US. Currency hurts if you're on the wrong side of it. That's certainly very important. So let's continue to break down this market right now. We know we're on a new low. We know that we've had some pretty big rip rallies this year, and that often those rip rallies have kind of ripped into key points. So they've ripped into those third week options expirations a lot of the time. We saw that initial kind of, let's say, manipulation down here for options, and then we started to rip through that week. And again, we find ourselves on the big option expiration. So let's have a quick look at options. This is what's going on for the week ahead. We'll look at Monday first. So we'll just quickly refresh this. Here's the Monday option expiration. I don't think this is going to help us too much. Max pain technically for today is 362. Stock price as of the close was 356. We know that the put walls sit very low here. So 360, 350, 340. If you were going to think what's going to make the most amount of sense for Wall Street to do, I guess they may want to close it above 360, but very small amount of open interest. Where the big interest is here is the 21st. Look at the difference, 4.5 here million. So a significant amount of puts entered into the system. That's where we get that max pain 377 from. So while we don't often use, well, we use this basically every third option expiration, we want to understand where most of the options lie. And at this stage, they actually lie really low. So we've got 360, significant, 340 and 330. So that is if the market does tank. Let's just say a watershed moment happens. I've seen some people saying there's runs on banks and all sorts of craziness going on. If we do get a watershed moment, where do we most likely end up lying? Well, 340 and 330 are both going to be key, pivotal, huge support zones where you're going to see that instant demand zap off if we do end up tanking. Kind of like 350 was last week. You can see these are put walls, but 360 is not to be ignored. And all of these hold, fairly significant amounts of puts for the expiration. So remember, it's the third week expiration. If max pain's going to work, it generally does so in this week. There's the most open interest at stake. And who has these? It's always the composite man, guys. They're the ones that have it. Wall Street effectively writes the most amount of options. So, of course, they're going to be the ones that benefit or fail from it. So this is the video we took on the weekend in terms of the analysis and the level. We discussed this from the Nasdaq perspective and the S&P 500. You can see it's come off that golden pocket and it's bouncing pretty nicely right now. And if we take the reverse golden pocket from the high here, that gives us kind of a resistance area or a problem zone of around that 11,000 flat. So a pretty good psychological zone. So I could kind of see the market rallying into this level and then potentially finding some weakness today around that zone. If we then do fill the gap, maybe that's where we see that bounce. But the big key level again is taking the new high. We get a new high, it's going to be relatively significant, and that's going to probably push these markets, I believe, potentially even past this supply into these levels here, that 12,000 kind of idea. So certainly weakness could be here, but maybe not just yet. This is the first initial weakness. This level is most likely not going to be as big a problem as I think we think if we do get through these highs. And then if we do keep going, I believe this is significant. This 12,000 will be a super level moving forward. That's a zone where a lot of shorters will come back in. A squeeze would be very, very nice into that zone. It would make a lot of sense for options expiration as well over the next coming days and weeks. Trapper Buck says financials place to look after we flush this week. Financials will usually not be the first turnaround story. So if you're looking at, let's say, trying to pick the bottom or something like that, in general, the markets that come out of bottoms, I'll just let you guys know, are usually these two, or this sector. Can anyone guess the second sector? I'll let the chat guess it. Chat, tell me, what is the second sector that tends to do well? There's actually two others that tend to do well. But what sectors go well out of a recession if you actually have picked the bottom correctly? Bijan says, I would be careful. Of course, we need to be careful here, Bijan. He says, I would be careful. I still see a lot of bearish potential, more weak or dead cat bounces now. Yeah, look, well, that wasn't actually weak. It was pretty strong. But yeah, it turned around. You do need to be very, very careful here. This is cat and mouse. While you could be incredibly bearish on this market, rightfully so, we've seen the correlations to 2007, 2008. We've seen the correlations to other markets. It's also one of those points where, as a trader, you've got to find those opportunities. So let's see what everybody else is saying here. Limitless says BTC. Yeah, I'm not going to actually, you'd be wrong there, Limitless, because think about it. When did BTC start to take off? Did it take off straight on March 23rd, 2020? Was that the sector that actually did well? Was it Bitcoin or was it something else? So Peter G's got it. It's XLY. That's a very solid sector. Consumer discretionary, both these do very well. And then the last one usually has been semiconductors. So those three tend to do incredibly well. Oil, financials, no, they tend to happen a little bit later on. Hilo says, whatever Nancy Pelosi's husband is holding. Yeah, well, if they vote on it, that would be good. But yeah, XLY, XLK, certainly a good guess there from those ones. Taj says, what impact will China have this week? Well, I mean, they haven't really changed much from what I saw. So unless, I mean, it's more of the same, but that's bad long term. So while short term, we could still see rallies, long term, it's crap. I mean, that's like the worst news you could hear, really, doubling down on a big problem. It will hit iron ore. It will hit production metals. They will not like those types of things. And you may even see oil kind of suffer from it. So US 100, you can see that kind of potential up until this level of 11,000 today with this rip rally that's currently going on. It came off a great level as we put in our videos. And that's just all technicals right now. If we do take the high, then we most likely move more into these upper rounds of that 11,600. But I could see it actually ripping all the way into like a 12,000 should it do so. Bear guys, well, you're hoping it turns today and you're hoping it turns around here. That would be good for you. And then once you get a new low underneath this level, probably fairly significant. That could be that beginning of what I'm sure a lot of you would hope for, which is that cheaper 3,400, 3,300 price. So here's again the US 500. That's very similar level to what the Nasdaq will hit. And if we think about the next zones, if we're thinking that the most critical levels moving forward over the next coming weeks, it's 3,400, guys. And I want to talk about the watershed moment because you have to have a plan should that occur. If the market goes all the way down really deep, where is it going to find the strongest buyers? And I believe that 3,400, while it will have an initial reaction, in my opinion, and that's just my opinion, this holds the big zone. So it's huge, this 3250 zone. So while 3,400 is the previous kind of pre-pandemic high, this is the true demand zone, the true big buy area, I think, for a lot of Wall Street players out there. And I could even see the market doing something really sneaky. So let's just say theoretically it does come down. It does come to this. When it comes down, I bet you it takes these lows to freak everybody out. Should it happen? That's the nature of these watershed moments. They go fear, hit a level, go slightly underneath it, and then ramp. Kind of like what you saw here with the 3,500 level. You hit it, you went slightly underneath, and then you ramped. And that was that previous close high from August 20. Was it August? Yeah, August 2020. Lee Eel says, put walls 323, 43, 60, then Wall Street 330, the one. Doesn't need to push up beyond current levels to take this out. Is that right? Yeah, they don't need to really move the market any further above the current price. So 36 will actually allow all of those main puts to expire effectively worthless. So yeah, I mean, some people have said we're going to get chop week. If we keep chopping within the range, that's really building a case that's, I believe, going to turn into a bad situation. So the more we chop, the more likely it is kind of like one of those stages of a crash, because that's not really what you want to see. If we're going to get the nice rally, we want to see it the next 2-3 days this week into earnings. If we keep chopping up and down, you've really got to consider that idea of the watershed moment. And that's consistent with every other time we've ever had lows in markets. Usually the VIX tells us, and generally the VIX, if you look at the S&P 500 over these periods, the VIX will spike when the S&P 500 hits those lows. So if you consider the S&P 500 overlay, low was made, big high VIX, low was made soon after, big high VIX, we got a low, obviously we second dipped that. And then here we have the high VIX. It makes a slight lower low, but that was still basically right on it. This one here was coinciding perfectly. This one, of course, coincided with that high. So generally speaking, a 45 plus VIX or a 40 to 45 VIX tends to at least show us a very close to near low, unless it's an absolute trash show like 2008, or of course what we saw over here, which was 2020. But at least we need to see usually a high VIX to show us the bottoms are in, traditionally anyway. That's what traditionally has happened. So a few people have mentioned Tesla. I do want to talk about it. Let's just bring up Tesla here. It's a really bad looking chart. Now, today it's up, which is good, 208.93. It's coming into earnings, so only 2 days away. In fact, let's just have a quick look at this next earnings. So we'll bring this up. Here's our earnings for this week, guys. We've got Bank of America here, Charles Schwab. Then we go into Rio, which is, of course, a iron ore company after the close. We get Goldman Sachs here. We get Johnson & Johnson, Netflix, the big first tech stock comes out. That'll be a very interesting, very telling day after the close Tuesday. Then we've got Tesla after the close Wednesday. I kind of feel like this one is going to be the story of the week. Tesla. Snap probably goes to like $1. No, I'm just joking. But Tesla indeed will be a huge earnings announcement. And it's just mostly because the price action's been incredibly lackluster. The Twitter thing, the fact that it's one of the last standing high PE stocks that's in the big ones. I'm not saying it's not growing. It's clearly selling tons of cars here in Australia, but that's not what you want for a weekly close. And you'll see I've got a little alert underneath this 180 level, and I want to discuss this. This was a critical level. So this was the March 21st, Friday. I mean, look how well Tesla's been holding in comparison. It's not even underneath its March 21 prices. Not even under the March 21 prices, guys. Phenomenal that it's held this well. So we're not under either of those, but this sits around 180, and then there's another little low that sits around here at 190. And I think both these ones here and this one here would be very interesting zones for day traders. You know, taking those lows, there could be significant traps around those levels. And specifically this 180, I think, is going to be one of those levels where buyers could pick this one up fairly aggressively should it actually hit it in the future. Now, most people will look for the structure. That's that 125, 130 zone. They'll be looking for that structure across this area here. But yeah, this level, worthwhile at least having the potential of understanding that if you set an alert, at least if it does hit in the future, you'll have that alert going off in whatever platform you choose, and you'll be ready for a potential opportunity there. That's one thing you want to do. Tesla cult following is about over, says Trapper Buck. And Finken remembers the good old days when we had the number one super fan of Tesla in the room, which was Tesla Harry. And I'm telling you guys, Tesla Harry did all right, because Tesla Harry around this time here was relentlessly buying. The question was, does Tesla Harry sell all of his stocks at the high price? Probably hasn't. Tesla Harry says short. Yeah. Man, a lot of you guys have been with us for a long time. I appreciate that. It's a long, long time. Rob Baton, yeah, you remember it. DXY is dipping. Yeah, dollar index 0.69 down, actually. Just quickly, we'll load that up on this VIX chart. Actually, where do I have dollar index? Oh, yeah, look at that euro rip. I mean, this is pretty much in line with what we'd hoped. The last couple of days, you know what was really frustrating for a lot of people last week, I'm sure, was that sideways action for the S&P 500. It was waiting for that one bit of data. Like usually I say non-farms is the biggest bit of data of the month, but there's no doubt that the inflation number is all anyone cares about now. Everything else, you might as well just chuck it out. Oh, the Bank of England's coming in, whatever, doesn't matter. You know, Fed says something, who cares? Let's check out that data inflation number. That is being critical. I mean, if you put some kind of put or option strategy around it, depending on what it had actually been pricing in, there was some massive moves around those last kind of points. Huge Tesla volume this morning. Yeah, so buyers coming in certainly trying to pick this demand back up. But I will say that the weekly close matters. And when you look at this, what people are pointing towards, and hey, I'm not a believer of this one, but is a monstrous head and shoulders. So they're saying, of course, the distance between this head and this shoulder neck will be taken out. Now, that would make Tesla worth negative dollars. So that's not going to happen. And head and shoulders tend never, ever to complete this way in stocks. Remember, stocks are built towards the bull side. But I will say that that close, while it may be met by bull demand, this seems quite likely in the future now. Just my opinion. Let's see how the earnings go. It's just, if it happens, it happens. If it doesn't, oh well. Just saying those levels are very, very key. And this is coming from someone that owns a Tesla. And I think it's pretty good. Except for the phantom break-in that almost kills me. David K says that will not last long. I hope it will go. I hope I will got chance to. Okay, I assume you hope you'll get a chance to jump into Nvidia from lower lows. Yeah, so Nvidia, another stock. If you look at any, and we will do Bitcoin soon, guys. Don't worry. But yeah, Nvidia hit some critical lows here, September 2020 and March 21. I just want to remind everybody, this is what happened during the last kind of, it didn't really happen exactly when crypto crashed, because of course crypto crashed more around this period here. But we did see that nice turnaround with Bitcoin. I haven't really done the study with it, and I don't think it matters that much. But it does trade sometimes with Bitcoin. And it's weird because actually, I think the cloud for NVIDIA, and I like NVIDIA very much as a company. I believe AI is an incredible play for the future, and the pricing is starting to get a little bit more real. But yeah, when we last bottomed, we found that kind of cratering low through the March point, but that doesn't really matter. Let's have a look over here. So we had that December 18 lows, and it kind of turned around here, and then we got that secondary dip. Now, it doesn't matter too much, but we do know that, of course, a lot of mining was a huge part of crypto. Isn't as much at the moment. But I like the idea of NVIDIA kind of falling further. This is still a very critical level. I mean, it's exactly where, if you're at the top, you would have said, this is where, and this is what I always find funny. You can imagine, yeah, up here, how many people do you think, chat? How many people, when it was $300, said, oh, if NVIDIA goes to $112, I'm going to put in $500,000. Maybe they didn't say that much, but I'm going to go all in. That's what they would have said. I'm going all in, guys. If NVIDIA goes to 112, I'm going all in. That's what they all would have said. How many of them actually planned and did that? I've got it for you. 0.000000001%. There you go. Because what happens is by now they're fearful, oh, it's going to go lower. Oh, it's going to go lower. Up here, oh, if it got down there, of course I'd buy it. Now, no. It's going to go lower. It's the same thing with Bitcoin. 60,000. If I said, or if anyone had a crystal ball and said, hey, 20,000 by the next 12 months, people say, oh, I'd invest everything in that. But of course, that would be stupid. But at the same time, that's what happens. Yeah, you have a plan, and it's very hard to actually build or go through with that plan should action happen. I mean, Nvidia is down considerably from these highs, and that was ridiculous price, but 68% down from there. And from pandemic highs, we are currently up at the low there, and about 40%. So still significant. But yeah, it's just funny how that happens. Brian Wilden has a great quote here. When it's time to buy, you won't want to. That's true. When it's time to buy, you will be horrified. It's difficult to pull the trigger on those. All right, let's have a look here at Bitcoin, and we'll scroll down into the smaller time frames. You guys are screaming at me about the Bitcoins. So it's very similar to the stock market in this case. We've bounced off that mid-range trade. So we've seen this low hold multiple times. These wicks just continuously hold. We had a nice bounce through the daily here, which was, very good for the crypto fam. Now we're moving on up, and that's significant. Again, I would say the exact same strategy would apply with the stock market. We're looking for what happens kind of very, very soon. So if we took like a fib retracement of the pullback, you'll notice we're hitting into that pocket. This is going to be a potential area of some weakness in crypto. We make a new high. You can kind of get a little smiley face there because then you're getting past that 20,000 and you're saying, well, actually, maybe we're going to actually put some pressure here because remember in Wyckoff's law, let's just say this is a Wyckoff bottoming effect. We've kind of got that max pain. Is this the spring of that setup? Question mark. We breached this level up here, which we've had an alert for ages, this 20,500. All of a sudden, we're talking up here. Now, what does that mean for the S&P 500? It's going to put us in that 3880 to 3920 zone, guys. That's exactly where it is. Thank you also to the 1,300 people joining us today. If you could smash that like button if you enjoy the stream, really appreciate it. That'd be great. So, yeah, if you're interested in supporting the channel, that's something we can do. We'll close the poll now as well. 66% of you voted positive this week, and the rest of you, 33% bearish. Interesting. So many bullish indeed. So we're approaching kind of that negativity for something like Bitcoin in this current little rally here that's coming through. We get a new high. So a little alert here. It's a good chance that we may breach that 20,500 because of the nature of how this has turned up. So sellers will want to come in fairly soon. Let's now move over to that US 500 again because I see it's ripping up. It's continuously ripping here. Very strong. Kind of worryingly strong early in the session. US 2000 doing something similar. It broke through that previous high. So we saw nice strength in the US 2000. The Russell never took a new low. But this is a very interesting movement here. Lots of gaps, big gaps, 1.5%, 1.7%. Dollar index got trashed then. It's moved straight back down. Euro is going strong. Everything we talked about on the weekend video is already happening pre-market. And you've kind of got to be worried sometimes when these stocks go up so aggressively. It's very, very tough at these zones. John says Tesla also looks like a Wyckoff spring in progress. Result will be good Wednesday. John is positive. Cool, John. Phil Fagan, 66% bulls. Love it. Momentum divergences don't happen often, and when they do, they cause massive moves to the upside with near perfect historical data. Yeah. That's true. So you're talking about the divergences between stocks, yeah? I assume, Grant, if you want to type it in the room, the one that I was talking about, or are you talking about something else? We've seen some pretty interesting divergences of stocks recently. In fact, while a lot of the stocks that you guys are trading probably have been going down, in general, the market has not made as many lower lows. So we're seeing stocks decline on going across the board selling, and instead it's been very specific stocks getting smoked. Tesla, Nvidia, semiconductors, just to name a few. If we actually load a little thing here, let me just move this off, close that for a second. If we go and have a quick look at the US market, and we'll go US up here, and we'll click on heat maps, and we'll go top at 50, 10-day change. You can see that it's really, look where they're smashing. They're smashing automobiles. They're smashing whatever the hell that is. They're smashing semiconductors. Utilities have been getting beaten. It's not an across-the-board huge sell-off over the last 10 days. It's mostly been in growth and specifically big priced stocks. So anything to do with high ticket pricing, consumer discretionary still gets hit. You can see here marketing internet marketing as well, but semis have been one of the biggest hit sectors. Where's the smart money, dumb money this week? How often does that chart get updated? It gets updated all the time, Peter. But yeah, we don't have... Grant says, by the way, momentum divergences on stock, but I'm not going to update it in terms of there's nothing new. I only use something like those kind of indicators when they've got massive differences. So when the difference is huge, we want to be paying attention to that. So yeah, Grant, I agree with you. It's very valid, some of these stats we're bringing out. So just to quickly show people, washout model, that's not one that I use, but here are the stats and the signals that you've gotten in the past. So again, technically bullish on that side. These net shorts are pretty ridiculous. I mean, there's no doubt that that's a lot of shorts. And while they may not be wrong about how bad the US market is, I honestly believe if the Fed wasn't there as the buyer of last resort, our stock market, the stock market here would already be 20% lower. The Fed has stuffed it. So have all the central banks. I'm just going to say it. They've stuffed it up. The market knows, you all know, that if they could, do you think Powell, I want to ask the chat, guys, do you think Powell would come out and he'd be like, yeah, print the press, get it out, let's go. Boys, we're going to 10,000. Of course he would. They don't want to deal with the problem. It's too hard. Oh, we don't want to deal with that. We'll let someone else deal with that. So you've just got to believe that eventually the Fed will come in and they'll always step in. It's just they can't right now because of inflation. Otherwise, they would. And that's the only reason the market's down, but it's not down as much as it should because they know that the Fed's sitting there working out its sneaky ways to potentially backdoor cash into dead companies, the zombies and stuff. So here's some other notes. Only one other time have we not seen a turn at the end of the year, which was, of course, the GFC, the global financial crisis, out of the last ones. Here's where we are in terms of synergizing. If you haven't already watched the video, it's a pretty cool little synergy. There's the synergy charts. Of course, a lot of them turned around to this point here, except for the GFC. And more importantly, of course, these divergences between momentum on stocks, as we mentioned, is a big deal. So yeah, all of that stuff is definitely worthwhile considering here. The next Borg says, relatively speaking, the S&P 500 is not down much overall. Well, the S&P 500 is never going to cop the brunt of a worldwide problem. Just remember this, and I'll always say this. Which market, I'm going to ask everyone in the chat, put it in, guys. If the market all dropped tomorrow, or let's say, tomorrow, if every market in the world dropped by 15%, which market are you going to buy? Which market would you buy if they all dropped 15% tomorrow? Yields are going down. Yep, we'll discuss yields. So, of course, we are seeing here our top end range of yields. This is the 2-year. Hits into this crazy area of 5% soon. So we're at 4.5. We're seeing that drop a little bit. Maybe the expectations are changing. We've got the US 10-year dropping from 4%, which is that previous little resistance here. So here's the answer to most people. People are saying crypto, VU, US, NDQ, gold, tech, DJI, whatever, Russian economy. Okay. Yeah, well, the answer to me is S&P 500 or Nasdaq. Yeah, it's American stocks predominantly. And the reason is because, remember, if the DAX dropped 10%, even if you have all the ASX 200, which one would I rather have? 10, 15% drop. I'm going to go with the American market. And the majority of investors will. So when you're talking about relative drops, S&P 500 will never generally drop as much as the rest of the world. John Galt, $10. Thank you very much, John Galt. What do you think of gold miners if the Fed pauses? Oh, pauses, hikes. Yeah. If we see yields go down, miners should go well. So I'll load one of the miners now just to discuss it. And we'll use Barrick in terms of stocks. And you can see that actually Barrick has been holding as best it can at those March 2020 lows. And compared to spot price, Barrick and other gold companies are actually doing terribly. So here's gold price. There's the March 2020 lows. Look at the difference. It's big. It's like spot's like 10% higher, yet Barrick and others are getting thrashed. So I do think that you'll see a turnaround in gold should yields drop. John, that's generally the way it goes. Yields up, gold down. Yields sideways, whatever. Yields holding for a long time, holding, potential stagflation, gold up, okay? But yes, if yields go down, gold generally goes up. That's the general gist, even though people can't understand it. It's a mixture of, just remember, what would you rather hold? Sweet US dollars right now or gold? And a few of you are going to answer gold. But I'm going to say this, sweet US dollars is about to potentially earn me 5% in the bank. What's gold earning me in the bank? Nothing. It's costing me. Kevin says Barrick is getting thrashed because of the USD. Yeah, but there's other gold companies. You know, here's a Australian gold company, NTM. It's also thrashed, you know, very low. In fact, this is so thrashed. I mean, I'm sure it's got its own problems, but it's so thrashed, it's even under those lows. So there's a lot of thrashed gold companies out there. LC says USD is the world reserve currency. You are correct. You are correct. Lithium is the new gold. It's just not that rare, yeah? Lithium always gets people. I feel like it's like that hype. It's like the 3D printer that just keeps coming back, or the marijuana stock that just keeps coming back. Anyway, we're only about 15 plus minutes, or was it 17, 18 minutes away from the open. So let's go through again some of these things. And we haven't covered gold off, so let's do it. And actually, we'll use a bit more of a clean gold chart. There's all sorts of, that's the wrong one. All sorts of madness on that chart there. So we'll use this one over here. And we'll just go down into the small time frame. So firstly, the weekly. Well, if the US dollar is going to drop today, then of course you've got to expect gold to potentially find strength. Now, there's not, I kind of have said this for a while. I feel like, especially if yields go up, gold could realistically potentially go all the way down to these lows. I'm not really bullish nor bearish on gold at this stage. I was wanting this thing to go long here, but once it took that low out, you've got to kind of like reconfigure it, figure out what it really wants to do next. So let's have a look now at the market. So we come off this demand down here, very strong kind of little demands. We know where our highs are. So if we were setting alerts this week, we'd certainly want to know if the market gets through 1685. At this stage, effectively underneath that has always been strong supply. So we've seen a lot of selling coming through here. A breach of this zone is going to activate a lot of longs on gold. And while the market may pull back, ultimately, there's a very strong case to be saying turnarounds here. This is the equilibrium level. We're basically hitting that at the start of today's session. That 1670 level is critical. You can tell by looking through the middle of all this price that a lot of trades have been placed there. So the market's come up to that level, and that's why it's initially having that small sell-off reaction to that. It's an incredibly significant level here for gold. But I like to see it take this level, then pull back later on the week. I think that's going to provide some very interesting trades. If you're thinking short, well, you've got to really pay very close attention to this level it just hit, because that's where most likely some decent supply holds. Sellers will come through on that. Oil, let's have a quick look at oil. I remain mostly bearish on oil over the medium term. Nothing really changes there, in my opinion. I've said it many times, but anyway, we'll see how it plays out. And so far, so good. From small time frame, though, you're looking at a breach of 87 being pretty bullish for today's session, taking out that high or that peak, and pullbacks most likely at that point to be met by buy demand. That's a fairly strong little candle that's come off there. And it happened right at the end. So we had demand takes the low, comes up, just a massive ramp there. And if it takes this high, that could be quite significant. So yeah, there's a chance here that oil does a little turnaround to the upside. Look, I'm not really interested in trading oil right now, guys, but frankly, because I've got my longer term concepts, but frankly, that's the kind of general gist we would have here. Wilson says, regarding dollar index, what's making it go down today? I thought US dollars is going up today due to shenanigans of England bank intervention on its currency. News. Yeah, we don't deal with news here, Wilson. The problem with that is that when you think about it, there's all this stuff underneath the cog. Often news they'll convince you with something. It's like today iron ore stocks were down and they were like CCP or China says no to the COVID policy and they remain the same. Is that really the reason it went down? Hey, your guess is as good as mine. I just like to think of it as look at the charts. The charts are going to show you it. Yeah, you might find a reason. Remember when the market dropped because there was a tanker stuck in the Suez Canal? I mean, come on, guys. That's we all know that's only a few days of problem before they fix it up. Yes, it might cost a few million or even $1 billion, but ultimately it's not going to make much difference. Yeah, there is news and there is news. The only news I care about right now at this stage, other than maybe the earnings overall, has to be still China's COVID policy. And the second bit of news is the inflation number. I mean, that's all anyone cares about. Let's face it. Natural gas. Horrible. Why are you trading this? Do not trade the Widowmaker, guys. It's called the Widowmaker for a reason. It is bad. Okay, bad. Here we go. B-A-D. I mean, if you like to have your face ripped off, then you trade natural gas. If you like 50% moves in only a few days and gaps between closed markets, you trade natural gas. Is that what you like, guys? That is not what I like. Yep, it's down from the peak, 37%. And this is probably a good case to say, see what's happening here. Natural gas, the contract is dropping into winter in Europe, into what everybody would think it should go up. Well, it doesn't look like it's going up. It looks absolutely horrific. It looks like it's going down, probably back into the 530 range down here. There's nothing good about that chart right now. Quill Owl, $5 super sticker. Thank you very much, Quill Owl. And also thank you to the 1,360 viewers out there that are watching right now. Appreciate it, guys. SPY, yep, we'll cover it. We've already done it, but we'll go back over it. So let's just have a quick scroll through every single, we'll do a quick rapid fire here on stocks so we can see what the markets are doing. Apple, long leg doji, obviously on that demand. Resistances here for Apple sit around that 140, maybe that 145, 46 range. So something to be said around there. Obviously, follow the S&P 500 is best on that type of stock right now. Amazon ended up closing near its lows. Not really a fantastic look for it on the weekly. Look at the weekly here. That looks absolutely horrific. If you're looking at a stock like that, I mean, that just looks really bad on the charts. So we'll find out what ends up happening with that. Remember, earnings is only a few days away. It's 10 days away here for Amazon, for Apple, for Microsoft. They're all coming out next week. It's going to be a massive event, I'd say. 8 days away, Microsoft. It's still on our beautiful, big, giant trend line we waited for a million years. We got that initial reaction. Today, 234. Again, it's going to follow these S&P 500s. And that's really the story of a lot of these stocks, as you probably imagine. Let's move over to the stock market again. We'll look here at the S&P 500. And we're coming in incredibly strong, guys. 1.72%. It's a massive gap. And if we compare that, so let's do it right now with the SPX, you can see that the last close was at 35.81, which was down here. So this is a significant open, a very bullish open indeed. last time we saw a bullish open like this, we ended up selling off. Yeah. It's not great to see these types of bullish opens. Let's have a look at some of the previous times this has happened. Just leading in. So we can tell because we can see it. This one here opened from the previous close, not anywhere near the percentage. This was a very bullish event. So this one we opened up significantly higher. From the close to the open, we end up opening up 1.39. So this is still higher than that. This was the one that I remind myself of, though, which was based on these lows. So we had that significant closure point, then we opened up 1% above, and then we had this one, which was another 1%. And we had that one, which was pretty significant. Now, it doesn't have to come back and fill the gap. But if we're going to find weakness today, you would think it sits around that 3670 to 3680 zone from a technical perspective. So markets come up, potentially find some weakness in our golden pocket over here, guys, with that structure through it. And yeah, that's if the bears are going to try to get some control, maybe that's a zone they're going to do it in. Kevin N says natural gas down around 7.24% right now. I love it. Have to heat my home. Yeah. Yeah, well, it's true. It's pretty expensive out there for many. I do feel for a lot of people on what this winter's going to be like in the north. For us, it's summer in Australia, so it's pretty chill, but well, pretty hot really. But yeah, it's not good. I saw some business owner. It was like 300-400% increase in utilities. They're like, might as well close and like close up the business. They were losing money at that point. It's just not good at all. 61.8 fib, of course, helped us to get this bounce here today. There's a bunch of other reasons why, but pretty strong. Looking for a new high this week to kind of confirm we could be in a squeeze. And again here, 3670, 3680 for that kind of potential weakness here today. If we go over to the Nasdaq, it's fairly similar. We're looking for around that 11,000 level to be hit. Maybe we get that initial ramp and potentially we see some weakness there. But yeah, fairly strong session, guys. Weakness in the dollar index, that will be one that I would look at as a lead. So I'd be looking at the dollar index taking a new low. I've got a little alert there. That would be certainly a key point in the future. Should that happen during this session for that kind of reasoning for the stock market to go up. 7 minutes off the open here. And yeah, just very bullish across the board right now. Let's have a quick look at which is the most bullish sector. Let's look at the percentage change. We'll quickly just pull this across. We have a pre-market here. I don't think we have a pre-market for the sectors here. Yeah, let's just use the S&P 500 pre-market change. We've got Bank of America must have reported pretty well, 5.11% up in the open. So very strong from Bank of America. Most of the banks doing okay right now. Some of the travel stocks doing well. American Airlines, Carnival. Etsy doing well, consumer discretionary, Qualcomm, semiconductors seem to be kind of coming out of the gates pretty strongly. Again, even Wells Fargo coming out well. Bit of growth doing well. Chase, JP Morgan doing another strong session. 2.75 was up on Friday after the result. So it seems to be like banks doing okay. Let's have a look at XLF, financial sector. Was that initial or that last couple of runs here. You can see that day, big ramp, and then we gapped up and then we fell over and we ended up down 1.68% across the board, but it did hold above that low. So if you, it took the low and it just went bang straight back up. We're nowhere near, those significant levels, but remember, we did actually already return back to pre-pandemic highs for the financial sector. So it's actually the same price as it was effectively back in January of 2018. So pretty significant zones. Sean says, Tom, you spoke not too long ago about the Japanese yen hitting 146 levels. So this is the JP10Y kind of issue. Not too long ago, being problematic. It's now at 148.68. Any comments? Yeah, look, I think it's a recipe for disaster. A disaster waiting to happen, Sean. I'm staying away from yen pairs. This is my own cautious tale. If no one's ever seen this before, I'm going to give you just a word of warning. I know we're only a few minutes off the market, but I really want to show you guys what happened when a central bank took away a floor. Okay, so there is an issue here in Japan. This is what happened when a central bank took away a floor. They had a floor at 120. They were trying to hold it. It cost them too much. Yeah. And eventually it's going to cost Japan, the central bank of Japan, the Bank of Japan, it's going to cost them too much and they're going to have to let it go if they keep getting pressured. They're trying to cause deflation in inflation. If we continue to see inflation, let's say we spike a 5.5% in the forward yield on the US, oh, it could be really bad, really, really bad. But this is what happened in 5 minutes, and it was worse than this, guys. I saw people's accounts like blow backwards, like 300,000 from 20,000. You know, it was shocking. So it says like in 5 minutes it lost 31%, but really the print was down at 46 or something during the day, and then you know it's been modified a little bit because it wasn't real price, but there was nothing there. There was no liquidity. So to say this is serious it is. What Japan is doing is they're trying to hold this yield at 0.25 or lower. And yeah, that's coming at a huge cost to their currencies. So the trade is very dangerous right now. That's correct, JB. Isn't the pain for the banks further down the line? Are they really feeling the current economic pain yet? No, not in my opinion. You're going to generally see the economic pain appear in consumer discretionary. And that's why it gets beaten first. Consumer discretionary tends to be the worst hit sector. And usually financial things like tech just goes. But consumer discretionary will be the ones to watch, especially Amazon. And that will be one I'll check out there. So the market's coming in here, guys, fairly hot. I know it's disappointing if you haven't had the chance to buy or to get in on these kind of runs. I always have the thing of, you know, what I say up here, you know, patience, react, don't predict. It's really a motto of my scalping concepts. And if you're ever interested in any of those, you can come over to fxevolution.com. And I've just launched my advanced scalping course. It's pretty damn, I think it's a bit of a banger. It's pretty good. Took me a long time to build these concepts, and it's pretty awesome. But regardless, you always want to have that patience. Yeah. If we don't have patience, then you're just going to get crap price. If you get crap price, it'll end up going bad, and then you'll get stressed out. So with 1 minute to go, again, we saw that kind of level through here being a very key zone. It's a critical zone for the markets at 3580 to 3600. We're just absolutely ripping here. If the market keeps ripping, there could be some issues around this 36. Let me just give you that again. 3670 to 36 kind of 80 area. I could see some issues in there. And yeah, I guess you're just hoping it kind of keeps ramping and potentially gives some form of turnaround story somewhere in here. Otherwise, if it just keeps ramping and ramping and ramping and you've missed out, jumping into something is not really replicable. It's more just gambling. So you got to be very, very careful. Here we go, guys. We are open. So ding, ding, ding. The markets have opened. I'll just put next to this SPX so we can check it out. So let's have a look now at some of these stocks. There's big opens here across the board. You can see, look at this one. That's a leveraged ETF. Semiconductor, 3X. For the Brave, 10% up today. Wow. You're seeing some other tech stocks up as much as some as 7% up. You know, really heavy buying on pretty much anything risky and anything kind of sitting like that. In terms of gaps, you can see that big significant gap. Let's just look at it. There it is. So that's going to be one that you want to mark on your charts in the future. So you're going to want to have that gap sitting on your charts. And then I like to label them. So I like to type in there, putting gap and have it there. So yeah, we're going up towards that kind of problematic zone. You can see it's just ripping. What are some of these up now? US 100 up 2.66%. S&P 500 over 2 now. Bitcoin still hovering. So it's still waiting at that exact level we pretty much talked about before. Oh, it's kind of right there right now. So we'll find out whether the US, look at that US 500 come up. Man, it's ripping, guys. 36.62. Just rip. Intel rocketed up. Let's have a quick look at Intel. I didn't give you guys enough love for the Intel before. It's not that good. Intel rocketing up. Come on. Ric Flair's mad. He says YOLO all the way. Is that because you just go woo when you come in? Is that right, Rick? You just keep yelling that and then hope it goes up. QQQ 370 is a key zone, says Kevin. Intel is not impressing me. I'm sorry, guys. I don't get impressed by whatever the hell that is. Are you impressed? I'm not impressed. I don't really like chips, though. I'm not even a fan. Like, I like AMD. I got it in my computer. Hey, AMD is good. But to me, I want the AI plays. And Intel doesn't interest me from that end. The Americans get what I'm saying with that one, with the Ric Flair. Look at it go. 36. I just want to see it hit this area. I guess it's going to now. Let's check out this Nasdaq at the same time. 2.82. Put a little fibby on this one here. We're about touching that area now. I want to see the S&P or the fib. Let's go super low time frame. The 11,000 was hit. By the way, that is not super high quality what we're doing here. This is not refinement. It's just, I just feel like, when you see a rip like this, often it will hit these types of zones. Are we at the golden pocket? You are on one market, but not on the other one. Not on the S&P just yet. Very close. You hit it on the Nasdaq, though. AMD is certainly winning in the tech and adoption space. Yeah, AMD is doing pretty damn good. Look, the process is awesome. I've got to say, it's great. But ultimately, my opinion doesn't mean much about AMD. It's whether they can crack those markets they need to do. Lee Eel says, we're going to rip right through that pocket on the SPY. Okay. AMC to the moon. Is that still a thing, Paul? Where the hell is AMC? Is it like $5 yet? $6. Impressive. Has it done 500 splits? I don't even know. All right, let's have a look here. I haven't visited it in a little while. Maybe I did. I can't remember. $6.12. It's not impressing me, the AMC. I don't know if it's split, though. I honestly haven't paid much attention. What about GME? Now, this one, I've got to say, I don't get impressed by much, but I would say that this GME has seriously impressed me. I don't know. I would have never bet that it's still holding after these splits and everything. Shout out to the apes for holding this one up. They are crazy. I mean, you have commitment that I did not believe you had on this one. Impressive stuff. So you can see here that S&P 500 getting really close. I mean, it's a big rip rally here. This is, by the way, these types of large, giant candles are not generally symptomatic of healthy markets. I repeat, they are crap. They are not good, and they are not usually healthy markets. If this thing goes on to do a monster ramp, you've got to be very, very careful about that. Remember, big rampy percentages, like over here, where you get these giant big candles, like 4-5%, they're not healthy. They are bad, and they are generally what we call dead cat bounce kind of positions. So if we get big rip rally, like these big rip rallies or this giant big kahuna rally. I mean, what was this? From the bottom to the top, that thing was 8%, very significant giant candle. Not good, bad. This type of rip candle, let's have a look at this. So you can kind of remember what happened in January this year. Remember those big swings we got, that huge wick, and we rip. And I will kind of let you know, there's a good chance that bond indicators and stuff will sniff through that one. So we'll certainly be watching it. So we just hit into that kind of peaking, see whether it finds any weakness. So far, it is just rippy rip. Solar says rip so I could sell. When S&P 500 looks like a crypto chart, yeah. Oh, look at that. Just went straight through the little pocket. I have my Tesla. Vincent says, boom. Ripper Monday, yeah. Face Ripper Monday. We didn't quite reach 3680 yet, sir. But we are in there. So what you want to see now, if it is actually going to hold, you want to see some structure actually forming, some kind of weakness ensuing, but there's nothing yet. But that's impressive. 3% Nasdaq, 2.5% SPY. Yeah, it's impressive stuff. Kevin says you should have bought a Kia EV6 GT, Tom. I don't know what that is, but I don't think I want it. I'm happy with my Teslas. Tesla's all right. Tesla's cool. It's very minimal. I like it. But there's too many of them. I can imagine in America, there's just like Tesla, Tesla, Tesla. Whoa, there goes a Porsche. Tesla, Tesla, boring. It's like Toyotas. They're everywhere. Tesla's everywhere. Toyotas everywhere. Finken says, certainly being friendly in the small caps, some 100% rips out of the gate this morning. Oh, wow. 100% rips. Damn. Carl G says, I didn't see many when I was in Florida. In Florida, everyone drives a pickup, yeah? Dodge Ram. Is that right, guys? Is it Dodge Ram? I'm not American, so I don't know, but I'm assuming Dodge Ram. We need to drive Dodge Rams everywhere so that we can tow our boats. Chevys. Here I was thinking Dodge Ram was one of the biggest sellers. Dodge Ram. I must be gravely mistaken. Oh, okay. I'm wrong. The Ram is now number 3. Ford F-Series, Chevrolet Silverado. I didn't know those. They're like those gangster mobiles when you put them in black. And then you've got the Dodge Ram. So this market's just ripping, guys. Remember, there is no signs of weakness. So even if you find a level that you believe could be good, you got to actually see some structural weakness. Markets don't just do this generally. They don't just go, meow. They usually go kind of like this on the small time frames. John Moore says, help me cope with the FOMO. Rip rallies will eventually usually turn bad. There you go. John, you like that? If it's a ripper, it's not necessarily a dipper. No, actually, no, it is a dipper. That didn't work. That didn't work, guys. Sponsored by Dodge Ram. Yeah. Hey, I'll take a sponsorship from Dodge Ram. John says, I drive a Lotus from 1990s. How do you get into that? My mate had a Lotus. You can't get into it. It's too low, man. It's like sitting on the road. Cool car. Chris Barnes has got some words of encouragement. It says, stay the course, be brave when others are fearful. But in this case, we have to be brave when others are FOMO. Is that right, Chris? There we go. If it's a ripper, it's not a sticker. Ooh, that's nice, sir. Congrats. I know they're not necessarily the most reliable cars, nor are they the fastest cars, but that I like the DB9, man. Very cool. Galaxy number 8 says, if you jump in now, it's clearly the FOMOs. Yeah. And Gary says, just stay patient. Markets will always come back. We just got to remember this type of rallies are ridiculous. You know, this type of movement, while don't get me wrong, it's a correct based signal for this type of rip. Which is why I've talked crap about it. Realistically, it's not healthy to have these types of moves. I mean, this is not predominantly the type of market that usually turns around like this. I mean, you still got a VIX very high. I mean, obviously, you're seeing the right things for turn. It looks like yields are going down, dollar index. People buy these bottoms. You could make a case for investment levels. I mean, of course you could. But even during this pandemic period, you know, we got massive rips. I mean, look at this day. This was some of the craziest action I've ever seen in my life in markets. 9.12% ripper. You know, 9.12%. This one down the bottom that was actually the low was 10%. These sells were hitting limit downs. Even the pandemic doesn't really compete with those. Sorry, not even the pandemic, in the GFC, you know, it struggles around that area. Anyway, we're at around the right zone for us to potentially find some weakness. We hit that little bit above 3680. We're finding some sell pressure here. We haven't got any structural sell just yet. So be very, very careful, guys. And if you feel like just sitting out, I mean, remember, there's always currencies. There's always gold. There's oil. There's not natural gas. That doesn't exist. You know, there's a whole bunch of other opportunities. There's even Bitcoin. That's barely even moving. That's moving less than the stock market today. So there's a lot of opportunities out there, and I'm sure there'll be another opportunity just in the next couple of days if you missed it. So yeah, from I guess everyone at FX Evolution, I want to say a big thank you for watching today, guys. The 1,400 of you out there. Hope you've enjoyed the stream. And as always, if you can give it a thumbs up, subscribe if you haven't. If you're new out there, I see you. I see you right now. Click that button. Don't unclick it. Click it. Press the bell, all of that stuff. And we'll come at you tomorrow with another daily update. I hope to have, well, I mean, I kind of hope it's a rip rally. Okay, so I'm going to go with, I want rip rallies. Why not? Why can't I have the rip rally, guys? And I would very much love these levels to be hit in the future. And then, of course, reactions off that. And we'll be there together at those points if it does happen. Be careful out there, guys. Practice risk management whenever possible. Remember to open up, you know, your eyes to potentially a few different markets. And yeah, there's always another opportunity. Abundance mindset, abundance mindset, abundance mindset. It means nothing to most people, but if I drill it in enough, it's a big thing in everything in life. If you're going for a job and you think that, like, let's say you're there and you want to ask for a pay rise in your job, ask for a pay rise, but only do it. Only do it, guys, once you've actually done a good job. Don't do it when you're disgruntled, okay? That's for dumbasses. You do it when you've done a good job. You finish the job. Hey, can I get a pay rise? And then they're going to be like, you're fired. No, they never fire you. They can't do that. All they'll do is say no. There's no wrong with asking, yeah? All right, have a great day, guys. Good luck, and bye for now. Ciao. JB says here, just to end up, which earnings report, if not meeting expectations, will affect the market the most? Big tech next week, man. Big tech next week. That'll be the one. But it also could come off Netflix and Tesla. Most likely they're isolated. But yeah, the big tech is the one that will affect the most because that's the biggest component within the market. Ciao. See ya.